As of 10:48 a.m. Eastern Time on this Tuesday, January 13, 2026, SMX Security Matters PLC is trading at $24.11, representing a sharp intraday decline of 9.05%. This movement comes after the stock hit a session low of $24.05, and while the broader market indices are showing varied signs of life, SMX is currently battling significant downward pressure. If you are watching this on your Fidelity mobile app or tracking the ticker through Robinhood stock trading, you are likely seeing a chart that looks more like a cliff than a staircase. Most investors looking at the screen right now see a company that just dropped nearly 10% in a few hours and assume the story is one of simple failure. But here's the part that isn't showing up on the standard ticker feed. While the stock price is stumbling today, the company just confirmed it is now applying its molecular marking technology to the global silver supply chain. This means they are effectively trying to turn physical silver into a data-bearing asset that can be tracked from the mine to the mint without a single paper document or serial number. The expectation in the market is that a company with this kind of advanced technology should be a stable, high-growth darling, perhaps something you would find in a curated list on Schwab Intelligent Portfolios. The reality, however, is a jarring contrast. SMX has spent the last year navigating a brutal landscape of reverse splits and heavy dilution that has left even the most seasoned users of Interactive Brokers trading platforms scratching their heads. People often group this company in with other high-tech plays like Nvidia stock or Apple stock because of the sophisticated nature of its patents, but the trading reality of SMX is much more akin to a high-stakes lottery. You have a technology that can theoretically solve the global problem of greenwashing and supply chain fraud, yet the business is fighting for its life against its own capital structure. It's a classic case where the engineering is decades ahead of the balance sheet. When we look at the trading volume today, we are seeing over 394,000 shares change hands, which is significant for a stock with such a tight float. This activity suggests that institutional players and retail traders on the Robinhood app are reacting to more than just a news headline. Just 5 days ago, the company announced it had successfully converted over $20.6 million of debt into equity. On paper, that sounds like a win because it clears the books of long-term liabilities. In the real world of online investing, however, that conversion represents a massive influx of new shares hitting the market. This often creates a supply overhang where the market has to absorb millions of dollars worth of stock being sold by former debt holders who are finally looking to exit. This is why you see the stock price struggling today despite the news about silver tracking. The market is effectively being asked to buy up millions of dollars of new equity at a time when sentiment is already fragile. If you look at how people approach self-investing these days, there's a tendency to look for the next big thing without checking the underlying plumbing of the company. SMX is the ultimate example of this trap. They have a system that uses microscopic, invisible markers, essentially a submolecular barcode that can be embedded in anything from plastic bottles to rubber tires to gold bars. Unlike a QR code or a label, you cannot peel this off. You cannot forge it. It is part of the material itself. For an individual brokerage account holder, that sounds like a slam dunk. Why wouldn't every company on earth use this? But the barrier has always been the cost of implementation and the speed of adoption. Large-scale industrial players are slow to change their production lines, even if the tech is superior. This delay creates a gap between the technical potential and the actual revenue, a gap that SMX has had to bridge by repeatedly going back to the capital markets for more cash. The volatility we are seeing today is also tied to the memory of the 41-to-1 reverse stock split that occurred in mid-2025. For those who were holding the stock then, the memory is painful. Reverse splits are often seen as a sign of desperation, a way to keep the share price high enough to stay listed on the NASDAQ. While it worked for compliance, it didn't solve the fundamental cash burn. Now, as we move through early 2026, the company is trying to prove it has turned a corner. They're moving into the denim and recycled clothing sector, aiming to help brands prove that their recycled jeans actually contain recycled fibers. This is a massive market, but again, the market expectation is for instant results, while the reality is a long, arduous process of pilot programs and trial runs. Let's talk about the institutional activity for a moment. If you look at the data coming out of Fidelity Wealth Management or similar high-level analysis firms, the ownership of SMX is remarkably thin. This is largely a retail-driven stock, which explains the wild swings. When you have a low float and high retail interest, even a small bit of news can send the stock up 70% or down 20% in a single session. We saw this in early January when the stock doubled in value in a matter of days, only to give back those gains as the debt conversion news settled in. This is not the kind of stability you find in Fidelity ETFs or conservative mutual funds. This is raw, unfiltered market speculation, where the expectation of a massive government contract for traceability is constantly fighting against the reality of a company that is still trying to find its financial footing. Comment below how many shares of SMX you currently hold, or if you're staying away until the dilution stops. I want to see how many of you are actually trading this versus just watching the madness from the sidelines. The business model itself is fascinating because it targets the circular economy. Most companies today are under intense pressure from regulators to prove where their materials come from. If you're a company like Tesla stock, you need to prove your lithium is ethically sourced. If you're a fashion giant, you need to prove your cotton isn't from forced labor. SMX provides the proof that is physically impossible to fake. They use a reader that can detect the markers even if the material has been melted down and recycled 3 times. This is their ultimate value proposition. They aren't just selling a product, they are selling certainty in an age where greenwashing is a major legal risk for corporations. However, we have to look at the recent financial performance to understand why the stock is sitting at $24.11 today instead of $200. The last reported quarterly figures showed a net loss of over $11 million, with operating expenses climbing as they try to scale their commercial operations. For a company with a market cap that has hovered around the $50 to $200 million range, that's a heavy burn rate. They had less than $1 million in cash at the start of some recent periods, which is why the $20 million debt conversion was so critical. It wasn't just a strategic move, it was a survival move. This is the reality that many who do online investing often miss. You can have the best technology in the world, but if you run out of cash before you reach scale, the technology belongs to the creditors, not the shareholders. As we look toward the rest of 2026, there are a few major catalysts on the horizon. The entry into the denim market is slated for this first quarter. If SMX can secure a contract with a major global brand, someone on the scale of a Levi's or an H&M, that would be the validation the market is looking for. Right now, investors are tired of pilot programs. They want to see recurring revenue. They want to see SMX technology becoming an industry standard rather than an expensive curiosity. There is also the potential for government legislation. If the US or the EU passes stricter digital product passport laws, SMX is perfectly positioned to be the primary provider of that data infrastructure. That is the expectation. The reality is that government bureaucracy moves slowly, and SMX is burning cash quickly. For those using SoFi Active Investing or other platforms for self-investing, the risk profile here is extreme. This isn't a set-it-and-forget-it kind of holding. This is a stock that requires daily monitoring because the technical patterns are often dictated by liquidity rather than fundamentals. When you see the stock down 9% today, it might be an attractive entry point for someone who believes the silver tracking news is a precursor to a massive industrial partnership. But for someone else, it's just another step down in a long-term decline. You have to ask yourself which side of that trade you are on. Are you buying the hope of a transparent supply chain, or are you selling the reality? As of 10:48 a.m. Eastern Time on this Tuesday, January 13, 2026, SMX Security Matters PLC is trading at $24.11, representing a sharp intraday decline of 9.05%. This movement comes after the stock hit a session low of $24.05, and while the broader market indices are showing varied signs of life, SMX is currently battling significant downward pressure. If you are watching this on your Fidelity mobile app or tracking the ticker through Robinhood stock trading, you are likely seeing a chart that looks more like a cliff than a staircase. Most investors looking at the screen right now see a company that just dropped nearly 10% in a few hours and assume the story is one of simple failure. But here's the part that isn't showing up on the standard ticker feed. While the stock price is stumbling today, the company just confirmed it is now applying its molecular marking technology to the global silver supply chain. This means they are effectively trying to turn physical silver into a data-bearing asset that can be tracked from the mine to the mint without a single paper document or serial number. The expectation in the